What's up, YouTube and Triple T members? Jeremy Barber here, owner of Trading the Trend chat room on Discord. Link is in the description. Make sure you come check us out. Free 7-day trial. We obviously don't have any plays to discuss from today with the market being closed. The market will also be closed tomorrow and then Monday as well for President's Day. So we will not be back until Tuesday. I will be putting out a watch list with tomorrow's video. Those are plays to watch for next week. They may turn into something, they may not, but definitely want to keep an eye on them next week. So today we're going to be discussing some single candlestick formations. We went over what a candlestick is. Now we're going to be looking at more the formation of them and what that potentially means. The 4 candlestick formations that if I see them, they're going to have my attention. It's going to be the hammer, also known as a hanging man if it appears on an uptrend. You have the inverted hammer, or if it appears on an uptrend, a shooting star. Then we have a doji candlestick, and then a marubozu candlestick. So I put together this little video to show them to you in real time on real charts. Today we're going to be reviewing a few single candlestick formations. The 3 that we're going to look at I use pretty often. If I ever see these candlestick formations, it definitely gets my attention. So the first one we're going to take a look at is the hammer candlestick. It can also be called the hanging man. If it appears on a downtrend like it does here with CRSP, it is a hammer candlestick. If it was on an uptrend and it appears, then it would be a hanging man. In both situations, it can signify a reversal. So it means pretty much the same thing, that a potential reversal is coming. So we'll look, we have this support and resistance line right here. You can see that it acted as resistance right here. It finally broke up above it. We pulled back, we tested it again, we've come down, and now here we actually broke down below the support line and we finished back up above where we opened on the day, forming this candlestick. And like I said, this is a reversal candlestick. Doesn't mean that it's guaranteed to reverse. Nothing is 100% in trading. But if you can give me 65 to 70% chance, then I'll take that. So we'll take a look at this on the intraday chart. We'll look at the 5-minute chart today. And this is what formed that hammer candlestick. So you can see we opened up way up here, sold off, bounced up, sold off down here, and then from this point you can see we reversed. We started making lower or higher lows and higher highs throughout the day and finished up near the very top. So that's, you get the long wick here, and then it's recovery time until we get up to where this opened, and then we finish up above it, creating the small body of that candlestick. Now we're going to take a look at another chart. Here is the daily chart for East. Again, you can see I have my support and resistance line. This has acted as resistance there. We didn't quite get back up to it there. Here we broke through, pulled back. So it's been tested a couple times. We finally broke up through. And you often see this with breakout plays. It'll break through the resistance, but then it pulls back and it tests the resistance. It tests it as support to see if it is true support. So you have this candlestick right here. We'll zoom in so you can see a little bit better. So this candlestick intraday again, just like the last chart we looked at, intraday pulled back below the support line and then bounced up and finished up above it. Now the difference between this one and the previous one we looked at, this one did not make it back up higher than it opened. So this one I would be a little less certain of. I would like to see it close with a green candlestick, meaning that it closes higher than it opened, but it can still mean the same thing. And we'll look at this one intraday as well. So again, you see we opened up high, pulled back, sold down, and then right here was reversal candlestick, and we were off and up. Not quite to where we opened, but we did form that long wick, and then the real body would have been between here and this right here. So again, this is another one that we'll have to look at on Tuesday to see if Monday is a holiday. So we'll have to look at Tuesday to see if it actually did reverse. The next chart we're going to look at is actually, it is what's called a shooting star or an inverted hammer. It looks the same as the hammer, except for it is upside down. Let me get back to the daily chart. Okay, so here's our daily chart. And it's called a shooting star when it's on an uptrend like this. And if it was on a downtrend when it appears, it's called an inverted hammer. Again, means the same thing, that it can be reversing. So let's look at the intraday chart to see this being formed. Oh yeah, another thing. So whenever either a hammer, hanging man, inverted hammer, or shooting star appear and you have a gap up or a gap down on a downtrend, and then the next candlestick gaps the opposite way, that's almost a sure sign of a reversal. So again, if this opens up down here, opens down, then we're most likely looking at a reversal and a downtrend starting. So let's look at the intraday to see this being formed. So we opened up down here, up through the morning till about 10:45 or so, we were on a solid uptrend, and then it sold off the rest of the day. Now, looking at this on intraday, this doesn't look near as bad as it looks on the daily chart. It looks more like a consolidation. So this one I would be a little more iffy on if that was actually a reversal. Now again, if we see a gap down to open, I would say that we are looking at a reversal. So those are that's the hammer and the inverted hammer. Again, both signs of reversal or potential reversal. For confirmation, you should look at the next day. The next day will give you confirmation if it is a true reversal. The next candlestick that we are going to look at is an indecision candlestick. It's called a doji. Get back to our daily. So what a doji is you have a fairly long wick on the top, a fairly long wick at the bottom, and then the body of the candlestick is almost non-existent. You can open up, or it doesn't have to necessarily open and close at the exact same number, but in comparison to the rest of these candlesticks, you want to see a pretty small, and this is it right here. So what a doji is, like I said, it's indecision. It ran down, it ran back up, finished right around where it opened. This could also be a sign of a reversal, but it could also be a continuation sign. So this is one, a hammer or an inverted hammer, I may buy the day that candlestick is being formed. This one, there's no way to buy. It's a complete gamble, basically a 50-50 gamble at that point. Now, again, there's no support or resistance lines in this area. If there was, you could possibly take a chance on it, maybe load a quarter or a half a position on the day that it's formed, and then wait the next day to fill the rest of your position. So again, this one, we're going to have to wait for market on Tuesday to see if it's going to be a continuation or a reversal. Again, it's just a candlestick that if I see one, I kind of put it on my watch list, see what it's going to do the next day, because a reversal means you're going to have a fairly long move in a certain direction, and you're getting in right as it reverses. So it allows the opportunity for a lot of profit. We got one more doji candlestick, and it was back on CRSP. So this one right here, again, we had movement up and down, and it ended up closing, it closed within 20 cents of each other, or the open and close was within 20 cents, creating this basically a line on the candlestick. And here you can see we have, again, our was resistance, we broke through, we came back, checked it as support. And so with this one, this would have been a case where you would have seen this doji and said, hey, we're sitting right on support. Let me go ahead and load a quarter position. Let me load a half a position to see what it's going to do. And then it was a reversal, and we had a pretty nice move up if you would have been able to capture some of that move. Okay, the marubozu candle is a candlestick that, and these can be red or green. If it's a green marubozu, it's going to open up pretty much at the low of day. There's not going to be any or very little wick at the bottom. And then it's going to continue up pretty much through the entire day. And it's going to close at the high of day or very near the high of day. And you can see we actually have back-to-back marubozu candles right here. These are with these being green, this is a very bullish candlestick. We see that the buyers were there. They were strong all day from open to close. We opened at the low and closed at the high. And then you put two back to back, that's pretty strong movement over those 2 days. Now here, right here, we actually see a red marubozu. There was no wick at the top, and there was just a tiny little bit at the bottom, but that's small enough to where I would still consider it a marubozu. And again, it happened right in the middle of it, and we continued in the downward direction. Anytime you see a candlestick that is made up of just the body, chances are that it's going to continue in that direction. Let's take a look at this on the intraday. So here you can see we opened up right here at the bottom. We went up, pulled back, went up, little consolidation triangle right there, broke out above that. We had a fairly large pullback right here, but then again, buyers were strong. They stepped in right at the end of the day. You can see the volume increasing, and they ran it all the way up. We can look at this for the last 2 days. So day one would have ended right here. So we opened up here, again, kind of choppy consolidation. Then towards the end of the day, buyers stepped in, ran it up. So we were on an uptrend. And then the next day, same thing. Open here, pretty much up throughout the entire day, forming those two very bullish candlesticks. And here's the last candlestick we're going to look at, another marubozu candlestick. And you can see a much larger candlestick than many of the rest of the candlesticks in the chart. And again, very little wick, and there was only a 1 cent wick. Close was $9. The high was 9.01. We'll take a quick look at this just to see how that candlestick was formed. And you can see the intraday chart was pretty much straight up. Buyers never stopped. Not too many sell-offs. We had one little sell-off here. Gave us a lower low 3 times, but then that was pretty much it. The rest of it was pretty much straight up, and we're betting on the momentum to continue from one day to the next. It was straight up this day. We're hoping that if not throughout the entire next day, at least in the morning, those buyers are still willing to step in and buy. So that's going to wrap up our single candlestick lesson. Again, there are a few other single candlesticks, but those are the 3 main ones that I use in my trading. One thing we do need to remember with technical analysis is that nothing is 100%. If you can get something that's 65 to 70%, you'll be good. Make sure you're entering plays, and if you have a 70% chance of winning, then you should be able to make money in this market. Our next video, like I said, I will be releasing the watch list for the week tomorrow. And then I also want to explore my trading rules and the rules that I've set up for myself, as well as my do not trade list and how I came up with my do not trade list. That's going to be it for today. Thanks for joining. Good luck and stay green.